Hello and welcome to our new podcast series, Got 5 Minutes, where we will be discussing something new in each episode in less than 5 minutes of your time. So, got 5 minutes? Great. Let's talk about digital scorecards. This is Azmeen Ansar, Marketing Manager at CredoLab, and today I have with me our Chief Product Officer, Michele Tucci, to quickly discuss digital scorecards. Hi, Michele.
Hello, Azmeen. Thank you for having me.
So without taking more of our listeners' time, let's begin by briefly going through the term digital scorecards. What are they and how do they differ from our traditional scores?
So the digital scorecards are scorecards built on alternative sources of data coming from digital footprints. They don't differ much from traditional scorecards other than in the fact that they are built on a particular source of data, non-traditional, not related to credit bureau data, for instance, or income-related data, or application form-related data. And also the other difference is that they are developed by using machine learning techniques and algorithms that are able to extract insights and value from big data that otherwise couldn't be used for a credit risk assessment.
Okay, so is this applicable only to banks and other financial institutions who are looking to score their customers for credit cards, loans, and so on? Or is there a wider application for this?
The application of digital scorecards is actually super wide. They can be used for any unsecured lending product. So it could be a personal loan disbursed by a bank, or a credit card issued also by a bank. But it could also be used for pay later propositions, or for a point of sale loan, or even a two-wheeler loan. Anything that actually requires the user to apply for a loan without any collateral requires deeper understanding of user behaviors, of their credit history when available, and therefore the application of such digital scorecards become instrumental to make sure that the lender makes a better credit decision.
Just for us to get a better understanding, let's take the travel industry, for example. How can they use digital scorecards? And will this also provide any kind of benefit to the end customers also?
The travel industry has been tested a lot during the pandemic. But before leading to that point, something that was gaining a lot of traction was the ability of customers to book for flights and accommodations and pay in installments. So that was referred to as fly now, pay later kind of payment option. And the user would expect a seamless experience. They would like to pay for this travel in the same way they pay with a credit card. But if customers don't have a credit card, then the options available to them were quite slim. So there are a few examples, even in Southeast Asia, where online travel booking agents have offered a fly now, pay later proposition, and these have allowed even new to credit customers to apply for an instant loan and receive instant approval to enable them to book their accommodation or their flight in real time. The value that a solution like CredoLab brings to a fly now, pay later solution is such that the online travel agency can approve even new customers, the ones that are visiting their app for the very first time and for which they have no history, no transactional history that could be used to assess their creditworthiness. So to know more about this very particular use case, please download our white paper. We deep dive into more details on how we have helped this unicorn in Southeast Asia, and perhaps you can learn something from there as well.
All right. Thank you so much, Michele, for your time.
Oh, it was my pleasure.
All right. And I hope you all enjoyed the first edition of our podcast series. Stay tuned to hear all about our alternative database credit scoring model in our next episode. Got 5 minutes? Let's talk about digital scoring models. Until then, take care and stay safe. Thank you.